The Fed's Jackson Hole pivot away from FAIT marked a shift toward prioritizing employment, effectively tolerating higher inflation. Gold and silver rallied as markets priced in cuts of 25 to 50 basis points, though rising long-term yields signal deeper inflation concerns.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Goldfix Market Rundown. It's Tuesday. Hope you had a good holiday, good weekend. Your portfolio certainly did. Today we have two topics. We're going to discuss why you should not add to longs here and why gold is actually signaling a reinflation event is coming. There's the homepage. We put out 18 stories, primarily on gold and silver, over the last 4 days, from Friday to Monday. So I'm going to try and take it light this morning. Let's start with the markets. 10-year yields are up 5. The dollar is 98.33, up 63. The S&P 500 is down 59, 64.13. The VIX is 18, up almost 2. Gold is 34.87, up $41, well off the highs of the evening after cracking 3,500. Silver, $40.60, up 90 cents, close to but not at the highs. Copper, $4.49. Unchanged bid. I'm not even looking at copper right now. WTI 66.27, up $1 and change. Nat gas 286, down 4. Bitcoin catching a reluctant bid, still soft. Ethereum holding its own. Palladium and platinum are both up $20 and $21 respectively, in sympathy with silver and gold. This is about sympathy now. White metal summer, I guess. Gold, silver, decidedly weaker, 85, 87, and grains are offered. Wheat down the most, down over 8 cents at 5.26. Not sure why that is. Okay, so there's the homepage. We'll get to what we put out. We'll self-promote a little bit. We want to start with the reinflation or inflation reignition. We sent a post out this morning, right? And the main phrase from that post is gold is rising not because rates will fall as people are talking about, but because they're expected to fall too soon. You can see that in global bond behavior. You may or may not remember there are two ways to fight inflation. The first way is by raising rates. So when you raise rates, that's supposed to cool the economy. The second way is if you don't raise rates fast enough, the bond market will say, whoa, you're not fighting inflation fast enough. And the bond market will start to crater. So yields will start to rally because they need to offset the inflation. And so now you're seeing Powell pivot very dovishly on August 22nd. And in doing so, the bond yields on the long end have started to go up. We're getting that seesaw effect. The broken bond ladder that we warned would happen for the last 3 years and has been happening for the last 3 years. So while most people will be saying gold's going up because the Fed's going to cut, they're perceiving gold as a risk-on asset when they say that. Gold's going up because the Fed will cut. No. Gold's going up because the Fed shouldn't cut, at least as far as inflation is concerned. All right, so we have a lot more to say about that in two posts that we wrote, one for founders and one for premium. But let's just read a little bit of the summary here. The Fed's Jackson Hole pivot away from FAIT marked a shift toward prioritizing employment, effectively tolerating higher inflation. Gold and silver rallied as markets priced in cuts of 25 to 50 basis points, though rising long-term yields signal deeper inflation concerns. India's treasury sales and gold buying alongside BRICS ties reinforce bullion demand. With key payrolls and CPI data ahead, payroll's more important, the Fed's September 17th decision looms as a catalyst for the next move. The full analysis is in the premium post just sent out. Gold inflation reignition is coming. Next, just some of the posts that we sent out over the weekend, and we're just going to give you a quick of, because there are different categories. There's so many categories for gold right now. On the 31st, before the reopen, we looked at the CFTC. We didn't have a Sunday discussion, and the first words out of our mouths alone were, holy shit, because the macro discretionary, much to our pleasant surprise, was back as of last week. And we go into why that happened. And essentially, we were saying the market will be higher over the next week to 5 weeks in that conversation. India buys gold. This happened over the weekend during the Shanghai Cooperative Summit. India buys gold, sells treasuries deep in China ties. That explains the situation right there. Gold and silver soar in Labor Day. That's more of a breakdown in all the events, tying it all together. Founders, why gold is rallying may be complex. We're going to touch on that a little bit, but the insights from banks. Founders see. Miners, the U.S. pushback. I'm not founders, miners, the U.S. pushback. That explores, without saying the phrase, explores the potentiality of nationalization of mines. Founders, mining and the new protectionism, similar concept. How much more gold do central banks need to buy? That was an extrapolation based on some BOA analysis and our follow-up on it of how much more gold would central banks need to buy in dollar terms and in ounce terms. And it comes out to be about $2 trillion at current prices. You can see all those posts. Coming soon, BRICS versus G7, the cause of it all, the case for gold hits 20,000. That's not our case, but a couple people are saying it. Some of them have great reputations. We're going to break it down and go through it at some point during the weekend. Moran's Mar-a-Lago plan revealed. We had that ready, but we didn't send that out over the weekend. There was just too much going on. BRICS versus G7, the cause of it all, is a replication of a lecture that I gave in 2022 to students about why we were where we were right after COVID. Data on deck. Labor Day was yesterday, PMI, and Friday is the big one. We're going to spend a little bit more time on charts today because it's a tactical moment. We said silver to 40 before gold to 3,500. That happened. This won't hold much longer. That was done. Today, we're going to focus on why you do not add to, you do what you want to do, okay? But we're talking to ourselves here. We say you do not add to longs here. I expect a minor swoon. Think of 3,500 like 2,000 was. It flirted multiple times, but only really was broken when it closed above 2009. So call it gold at 3,509. This is a long wick above where we believe the BIS selling was before. You may or may not remember. I talked about it in the past where the BIS would cap rallies and would go sideways. It did it in December of 2023, 2 months of sideways. And we believe, I mean, I believed it before, but I kind of backed off on it because I saw producers selling as well. I believe they capped it back in April. And since then, producers have been selling. And I believe someone's back there. I'm not completely convinced we're not going up, but hear me out in a second. Okay. The next $50 could be lower, right? If you're looking for insight on if you should book profits, that's up to you. Remember, there are exotics in this market as well. We'll go through the charts in a second, but before we do, I'll give you some levels. This is the calendar for the next 13 days. Non-farm payrolls is this Friday. That's the big one. But the other big one that really no one's talking about yet, except for Zero Hedge and I think Goldman. Preliminary benchmark revisions for BLS. Last month, they revised them down. Last year in September, they were revised down. So BLS is just basically a shit show when it comes to reliability, and you can guess why. But the revisions lower could seal the deal for Powell, which is why he cut a year ago on September 18th, that and the political issues. PPI and CPI, normally very important, and they are very important, but they're secondary now. Remember, he removed the average inflation target concept, which got him in trouble in 2020. And he's essentially raised the target to 3%. That's what I see. September 16th and 17th is when the Fed meets, and that's when the decision will come out. So it's either 0, 25, or 50. So assume it's 0 if you think we shouldn't cut and you think he's going to listen to himself. Assume it's 25 if nothing else changes, everything comes in as expected. And then assume that 50 is on the table if revisions are big lower or if non-farm payrolls hit very low. Everything else is is a speculation. Okay, so I gave you an idea of the of why the rationale is. Uh, here's how it works when it comes to this stuff. All right, let me get rid of this visual here for a second. Here's the hourly. Okay, I'm going to tell you a story because this is what happened. People are buying for various reasons. The Fed's going to cut, long-term bonds are having trouble, liquidity issue, bonds are weak, et cetera, yada, yada, yada. All right, so they're buying for various reasons, right? Then it gets to here, and the previous high is here, and there's a long wick there. And after this long wick, the market goes sideways for 4 freaking months. That can't prove me right or wrong, but I'm right. That's the BIS. BIS capped in December 23 and caps it at various levels to let the market catch its breath, to let people calm down, to be a circuit breaker. And then inside of here, this was the producer selling there and there and there. And now it's done. Now, maybe there's more producers selling up here. I don't know. But now it's done. So now the market wants to retest where the final boss is. It retests it. It breaks it. And that's arguably saying we have a new high. The market can go higher. No, you can think that. But here's what you should think. It broke it. The market collectively was fishing for stops. Are there people who want to buy it above there? And what did it find? It found selling. It found selling. So there's more selling above 3,500. It's not to say it's the BIS. It's not to say it's producers. It could just be funds taking profits. It could be bearish funds that want to sell new highs. It could be a lot of things. But you do not buy a market that makes new highs and then goes back under the old highs. You just don't do it. That's a license to get killed because everyone who's buying now is buying because they missed it and they're buying the first dip. If macro discretionary is buying, then this dip may be bought and it may go back up. But I'm not going to risk $50 to $100 lower to hope for the market to rally $25. I'm just saying to you as a short-term trader, I would not be adding to longs here. Very important words I'm using here. If you want to buy and get long here, that's fine. Then do what you got to do. I don't care. But I would not add too longs here. I would consider taking profits, although I'm not recommending it necessarily. I am because depends on where you got long. But I would consider do not add to longs here. Do not dollar cost average up here. Do not be greedy. Okay? If this market finishes weak on the day, finishes under this high, which it is, okay, finishes under this high, then we could have 3 to 5 days of sideways to lower movement. And by the way, that's a DeMark indicator, 8 and 9. That says you're overbought. So it's kind of like a stochastic, and the market could go sideways. It could completely ignore the 8 and 9 and go higher. But, do you want to risk 50 to make 30? That's not how you trade this short term. Anyway, be careful. Now we go to we'll zoom out a little bit. Bollinger Bands, by the way. Bollinger, for the chat, for the people in the Goldfix chat, this is a widening. I didn't really talk about this because I was focused on the weekly. We'll do the weekly in a second, but here's day 1, 2, 3. We're 3 to 5 days out. The market could go sideways if if that line comes back up. The weekly is what we care about here. The weekly is where the monster is. This is the monster. It's like literally a snake, right? Okay, exhale, inhale, exhale, inhale, exhale, inhale. Big inhale, exhale. This is the first week of a 3 to 5 week run. So as long as the market doesn't settle below last week's high, 34.54, or doesn't trade below 34.21, then this market should be bought on dips if you have a 1 to 5 week horizon. That's it. Silver, completely different story. I mean, it's not a completely different story, but it is for me. Silver's like, I don't give a shit about gold. You know, gold's catching up to silver now. Silver's in the lead, which is, I got to tell you, is very, very surprising, considering considering uh, stocks are weak, right? Which says to me that there's something else going on here. You know, I think there's a what we're buying gold because of all this other stuff I just described, and we're buying silver because, well, we just want the silver. Silver's being monetized. It may not be money literally, but it's going to be. I think it's going to be an important collateral piece in the BRICS currency. Anyway, enough of the tactical stuff. That's how it works. Hopefully I'm right and the market goes sideways for 3 days and I'm not right and the market drops. But if it gets above this high that we just put in here, forget about it. It's probably going to run again, you know? So I would wait for that reignition. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.